Good morning. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for today, Wednesday, September 17th, 2025. Overnight, another quiet night. 3 cent range in corn, about a 6, 7 cent range in beans, wheat, about a 4 cent range. So not a lot going on overnight. Today's big day news is going to be, will the Fed cut? Boy, I think the news would be if they don't cut, right? Or if he cuts and says, don't hold your breath for another cut because the market's factoring in three, and that's something that will impact every other market. It's like dropping a brick in the shallow end of a baby pool. So it would cause everything else to sort of reprice. That's about it. These corn, unchanged, but almost it's up a half cent here at 430. For the life of me, I don't know why we can't go fill the July 3rd, July 4th gap at 432 and three quarters. If you read my letter, you know I've got those levels there. I call them the Three Musketeers. If you don't know what that is, give me a call. It goes, we have to fill the gap. Then there's halfway back, which is 436, and then 440 is the 200-day moving average. So if you're bullish and you're looking for confirmation, I would say that the biggest thing that would confirm any sort of real recovery for me would be is if we settle above 440, which is the 200-day moving average. So I also want to say this: be pointing out potential levels is not making promises that we're going to get there. I can't stress that enough. I've been doing this for 30 years. When I look and say, okay, these are possible upside targets, or the flip side, if you look at a market like cattle, it's like, okay, if cattle correct, what are possible support levels? The big word there is possible. I never want to ever have somebody think that when I pick a level and say, watch this level, that it's me promising us that we're going to get there. I can't be clear enough. These are important levels to watch if we get there. And if you are a producer, you're always bet long. So you're a net long speculator. You are a speculator. You are a trader. What I want is for you to have a plan for if we get there, what are you going to do? It's like looking at a map. You're in New York City and you want to get to Florida. Well, along the way, what are the targets you have to hit to get there? I'm not saying that you're not going to get there. I know you could get halfway there and then turn around, but that's what I'm talking about when I look at these levels. November beans right there at 10.50 again, a 7 cent range last night. We're only about 25 cents away from the yearly high, that 75 to 79 and three quarters area. Again, what's going to push us there? It's going to have to be more news that we're making progress with China. I think that's the one thing that's really going to turn the beans. Why? Because fundamentally, in that last USDA report, and you can tell by people's reaction to it because they're so angry, there was really nothing fundamentally in that data dump that was bullish, and that's why you've got a lot of people that are angry at that at those numbers. And my opinion is, what good does that do you getting angry? No, I think you're better off saying, okay, these are the prices we have to deal with. Let's deal with it. Let's hope that we rally. Let's hope that we get a continuation rally. I will say this: take a look at November 2026. That's making nearly a 1 year high. So if you're concerned about your grain marketing, you've got November 26 out there at 1090, almost ready to get an $11 print. If you're looking at next year for corn, the D's 26, it's hovering at 470. There hasn't been a lot to work with out there, but I think if we were able to settle, you know, sharply higher out there, it's time to start kind of moving your focus out there. I know it's hard. A lot of you, probably this is 2025. Half of you probably got 2023, 2024 set in the bin, and you're just marketing 2025. I get it, but 2026 is on the horizon. In the wheat, Chicago wheat had a again like a 4 cent range last night, up a quarter cent at 534 and a quarter. December KC, a 4 cent range, settled at 523 and a quarter, down a quarter cent. Minneapolis wheat sitting at 575. All three of those contracts are at or near 1 to 5 year lows. They are all trying to carve out some sort of a bottom here in the face of a lot of bearish negative fundamentals. Moving over to cattle, well, we'll see. Or is this correction that we've begun? Is it actually going to have legs? Or are we actually going to push a little bit lower? December Fat cattle yesterday settled at 235 and change, down a buck. October feeder cattle settled down 20 cents at 354.30. And even the hogs were a little bit lower. Hogs have been on a great rally. Hey, one thing I wanted to share with you, the funds are record long hogs. And they've been long all the way basically since the April low. So they've made a ton of money on this correction from the April tariff low. So that's something to watch there because, they could sell and really not care about the level that they sell at, and they still lock in really good profits. If you're a hog producer, I'm going to be talking to somebody today in Iowa. Take a look at those deferred months. They're giving you a lot of opportunity. You've got June of 26 at 102, July of 26 at 102. All that stuff out there is above the buck. If you look in July of 2026, um, again, they're all sitting at contract highs. So take a look at that. If you're looking for help, give me a call, 312-638-8868. Go ahead and sign up for my letter. Give me a call. If you like my approach, let's work together. Have a good rest of the day. This is Chris Robinson.